Good morning, folks. Welcome to your daily market snapshot. I'm Subhash Kumar, and here's what you need to know to start your day. First up, the FIs have sold for over 9,791 crores, and DIs have bought for 6,645 crores. And the net addition in options indicate a negative outlook for short term. Let's look at how the global markets performed overnight. The S&P 500, Nasdaq, Dow were all flat to positive. Dow was almost flat, S&P up by 0.42% and Nasdaq up by 0.38%. Crude oil was flat as also. Notice that S&P VIX cooled down by 1.3% but still seems elevated, which is still a sign of caution. As we head into the trading day today, GIFT Nifty is pointing towards a negative 60 points gap down opening. Now, while the entire sell-off was timed by the FIs, probably towards, targeting towards the SEBI curbing the FNO expiry, and I expected some news on the implementation of the policy yesterday. However, there seems to be no sense of urgency at the moment from SEBI, as there was no update on the same after the board meet yesterday. This leaves Jane Street and Millennium Funds. These are the hedge funds who profited from the retailers' losses in the last 1 year. It leaves them with more space to grab liquidity, from the option when it's available, and that's the game they played for the last 3 months. So let's look how the markets reacted. So in terms of key economic events, today we have the PMI index of India at 10:30, and CPI of the EU at 2:30. Manufacturing PMI of US markets at 7:15, JOLTS job opening at 7:30, ISM manufacturing PMI at 7:30 of US. So a lot of events are lined up. The US markets will be watching out for the data again. They would be looking out for data actively to ensure that there is no recession coming. So, which is why the S&P VIX hasn't cooled off. And yesterday, the Fed's comment was dovish, with their open statement, on its willingness to make required changes on the rates, which is the same thing they tell every time. The market took it positive, and most losses until the Fed speech recovered. And the US markets were in green after 12 o'clock last night. So the market expectations, the FI sold for almost $1 billion yesterday, which was the highest in the last 6 months. Now, while the data indicates a negative opening, again, since there is no update from SEBI on the FNO curve, this is a positive news for the prop firms, right? Who look to gain from the retail traders. So the market may swing either sides after the initial consolidation for the first half, is what I believe. But I still have a negative outlook nevertheless. So today's quote for today was, trade what you see, not what you think. Right? So that's it for today's market update. Be sure to check back tomorrow for more quick insights. And don't forget to like, subscribe, and hit the notification bell.